Because people are like, is it a good time to buy gold and silver? I'm like, well, what's the potential upside for gold and silver? It's tremendous. You look at the way that the governments are behaving, the way that the global economy is changing all the time. There's so much uncertainty. There's so much volatility. Upside for gold and silver is great. What's the potential downside? 10%, 15% versus potential upside of 200%, in our lifetime? It's a no-brainer, right? So, that simplifies the equation a little bit.
Welcome to the GoldRepublic Podcast. My name is Bart Brand.
And I'm Alexei Jordanov. In our weekly podcast, we invite guests from all over the world to get valuable insights
into the emergence of a new monetary system through the lens of precious metals, cryptocurrencies, and other financial instruments. Welcome to a new GoldRepublic Podcast. Today, our guest is Mark Yaxley. Mark, well, thank you for being here, Mark. You are the general manager of SWP, and you've been in the space for 15 years, which is a long time because if I look at you, you're not that old a guy. So I just wanted to ask you, at what age did you get into the precious metal space, and what has held you in the space for the last 15 years?
Well, I appreciate the compliment, Bart. I'm actually a little bit older than I look. I'll be turning 41 this month, actually, in just a week's time. I started in precious metals back in 2006. I was 26 years old at the time. So I've lived through an entire bull market from 2008 through 2011, 2012, and maybe the start of a new one here. And what's kept me in so long is probably the interesting people that you meet, whether it be the podcasters or the clients. As you know, gold bugs and silver bugs are some of the most interesting and unique people that you'll come across. So that's probably what's kept me involved so long.
All right. And well, just to jump into the last, couple months, we've seen an explosive stimulus by governments worldwide, and we've seen reactions from the public also fleeing into precious metals. One of the great, and really I can't say enough of it, is one of the initiatives is WallStreetSilver, and well, you're probably you're probably following this initiative. And what has SWP noticed about this initiative?
Well, first of all, let me start by saying that I think it's great to see a community of investors rallying behind silver. I tend to agree that silver is undervalued. I think it's the marketing campaign that they've developed. I know they've got billboards in the United States, and obviously on social media, they've been very active, and I think that will definitely give silver some spotlight. And it will attract a new segment of investors who may not have been familiar with silver or precious metals in general. So I think that's very beneficial, first of all. So let me start by saying that. What we've seen at SWP since the first push for Silver Squeeze, and now the subsequent second push on May 1st, and the marketing campaign from WallStreetSilver, we did see a rush of new account openings. And we did see a rush, or a spike, I should say, is probably the right term, a spike in activity. So new account openings and purchases. But those were relatively short periods of time. It was really one of those classic spikes where, as the social media ramped up, we saw the interest, but it did it did fade away rather quickly. So I'm not sure if they've attained their goal yet, their long-term goal to really squeeze out the large institutional players, the JP Morgans of the world. I'm not sure if that goal has been achieved yet. That's going to require sustained buying and holding from a large number of people, mainstream investors that aren't currently aware of silver or gold, or are not currently buying precious metals. So I'm not sure if they've achieved that yet, but I like the initiative, and certainly we're following it closely at SWP.
From my side, I was more curious on actually first also like getting to know what drives you every day. What are like your passionate drivers that make you wake up every morning and feel like basically injecting some of your energy every day to do what you do?
That's a great question. You're not often asked that question, actually. So thanks for asking that. I mean, look, aside from the obvious, I have a family. that I care about tremendously. And my motivation primarily is to my family and also to my staff. We've grown this company to the point where I do feel responsible for people's livelihoods in a sense. We've become the place where they go to work every day, and we want to make sure that they have a great place to work and that they're taken care of financially, and that it's something that they'll continue to do, hopefully as long as I have and longer. But what motivates me on a personal level, I think the number one driver for me at this point in my life is continual improvement, is always trying to improve my business, always trying to improve myself, even if it's very small incremental improvements. I think I've learned over time that even those small changes can add up to large results and be very beneficial to the business and to myself personally. And that's probably my driver right now. That's something that I do focus on. And within the business, we're constantly trying to improve our processes and deliver better results to our clients. So that's probably what motivates me the most.
Mm-hmm. And in that same sense, so you're active in the precious metal industry. You've started also at Kitco. That's where you also started your career, as understood. Where would you see, let's say, the positioning of the industry as it evolves throughout your career, but also in the last decades, basically being part of what we see in the monetary landscape right now? How would you define it? What's, let's say, your thesis, or maybe what is your narrative?
That's also a very good question. I think I'll start by saying I think our industry has suffered or suffers from a challenge where we have not, as a united front, have not marketed ourselves tremendously well to the general public. I think that most precious metal dealers, because there are so many of us, there's a lot of us out there in the world that do this, don't have one united message, unfortunately. And so the general public has a difficulty grasping the importance of owning precious metals and the core reasons, and also the education piece. And that's one of the reasons we did the series Inside the Vault, was to educate people. You need to educate people and make them feel comfortable with an investment before they're going to make the leap of faith. And I think that our industry has struggled in general. So that's one of my comments, is that I would love to see our industry do more of this, more of these educational pieces, more of this collaboration between different organizations. And I think that's begun, especially with social media and obviously podcasts, and it's allowed us now to speak as a more united front. And that is kind of cool. Like WallStreetSilver, that's one of the things that they are achieving, actually. And that's why I do support them, because they're uniting the voice and they're rallying the troops a little bit, which we were a little bit fragmented. So that's my first comment. I think my second thought these days, and where I start to question, I guess you could say, the future of precious metals. And I have no doubt that precious metals will exist and be an important role in a portfolio long after the three of us are dead and gone. But with the invent of crypto and the role that crypto is now starting to play in the global economy, and also with the younger generation of investors, I start to ask myself questions and my colleagues questions about, is gold and silver's role changing now? How do we attract that younger investor? How do we make sure that they are interested in what we're selling? And will they be interested? Will they see the benefits? But I think that all goes back to the education piece. So my narrative about the gold and silver industry is really, and my life goal is really starting to become education. I want to educate as many people as I can in my time about the benefits of owning gold and silver. And hopefully that will translate into future generations remaining interested in what we do for a living.
So in a short answer, how would you summarize this within maybe not a tweet, but a short paragraph on why is it relevant to own gold and silver nowadays? I mean, we kind of know, but sometimes it's also quite fascinating to hear maybe different perspectives or angles.
The elevator pitch on gold and silver, that's a good one. I always say to people, the tricky part about marketing gold and silver as an investment is that you have to tell a story, because it's not an elevator pitch. You're not buying a t-shirt or a pair of jeans, right? But if I had to sum it up, I would say, look at 2008 to 2011. Most people lost 40% of their wealth. Gold went up 140%, silver went up 400%. That would be my tweet, if that fits, because that is the best recent example of what gold and silver do so well, is act as a hedge against other asset classes that are underperforming or in crisis. And that's a visual. Anyone can pull up that chart, 2008, 2011 gold, and you can compare that to the stock market and to the housing market, and you'll see the benefits.
Oh, I think I haven't counted the characters, but I think it would rather fit. In that sense, you just mentioned one of the phase of 2008 to 2011. Now we have seen unprecedented economic, activities, not just in fiscal stimulus, but also just in monetary policies in general. Commodities have been rising throughout 2020 and still are in 2021. Lumber is hitting all-time highs. We have things like copper as well, rising iron, soybeans, all kinds of commodities are rising. Gold is also kind of picking up since the last 2 weeks, but silver is not, in a weird way. When you look at the gold-silver ratio that has since 2011 doubled, so from 80-1 to now approximately 40-1, and even recently, or even last year at the peak, to 120-1, why has silver, even though it has like some of its basically narratives of industrial use and then also the monetary function, why has it been lagging so behind? And why is it basically so undervalued compared to other commodities who appear to be really surging?
That's a great question. And if I had the answer as to why silver would be undervalued, I'd probably be a best-selling author or have a fantastic newsletter. But the question of silver's valuation compared to gold is one that people, tend to focus a lot of attention on. I tend to treat them as two separate discussions. I think that each plays its own role within the precious metals portfolio. And personally, I don't spend a lot of focus or attention on that gold to silver ratio. The gold to silver ratio, as you know, has existed for a very long time. And at what point it was as low as like 7-1 and 15-1 back in the day. I'm not sure how relevant that ratio really is in today's economy. It's an indicator. It's one of many indicators that we can follow. But to be honest, it's not one that I base my investment decisions on. And when I talk to my clients, I say, yes, it's one indicator, but it's not the only indicator that you should look at. Because there are time periods where gold and silver can become decoupled, or they will perform, differently. During volatile markets, silver will tend to outperform gold. So, generally speaking, if you look at the gold to silver ratio, you'll say, well, gold is outperforming silver effectively, and silver is undervalued. But if you look at a bull market, silver will outperform gold. Like we used that example earlier, 2008, 2011, silver outperformed gold like 3-1 during that period of time, 2.5-1. So it depends on the periods of time that you're looking at the ratio. It depends on the market conditions. They do behave differently. Obviously, they have different industrial usage. Gold has very limited industrial usages, whereas silver has a variety of usages. So I tend, to be honest, I tend not to follow that ratio extremely closely. And I don't think or I think there are very few people in this world that understand why it is that silver is still trading under $30 an ounce today as we speak. So I don't have any other theories other than the standard. There may be some manipulation in the marketplace for silver, the silver price. None of us are privy, and this is something I remind people of. It's easy to speculate, but none of us are really privy to all of the dynamics that control the silver price. So let's be mindful of that when we talk about it. But I definitely agree that there's more upside for that silver price than what we see right now.
That's actually a very fascinating point because, first of all, it's almost like silver is a bit of a schizophrenic metal when it's the second most versatile commodity in existence. It also has a 1,000-year old monetary function, and still we can see and even though I think it's very good that you make that point that we don't know. We don't know all the dynamics. There are some things that we can objectively verify that there is manipulation. We don't know how it manifests, but we know that there is. And it also, it makes silver, I think, a fascinating, it's actually, it's my favorite precious metal. So, I'm biased, but I wanted to couple that onto inflation. and maybe disruption of supply chains. But I know you talked about this before, but I also wanted to ask about what your experience is being based on the Caymans.
Sure, I'll start with the supply chain because it's very factual. We experienced a number of supply chain issues over the last 14 months as a participant in the industry, as a retailer in the industry. So since we're at the end of the supply chain, we are subject to disruptions throughout the supply chain. It really starts. So a lot of people tend to think that during a bull market, when products are harder to come by, they tend to sum that up that there's a shortage. You'll see headlines, silver shortage, there's not enough silver in the world. I would argue that that's not the case. The mining production is relatively steady year over year. The issue tends to take place at the mint and refinery level. These companies have, obviously they've invested in a certain amount of equipment. That equipment can produce a certain amount of precious metals in a 24-hour, weekly, monthly period. And they tend to operate on consignment agreements with their distributors. So they have fixed contracts in place with their distributors. They are going to deliver a certain number of ounces to each distributor based on how much their equipment can produce. As the market heats up and there's more demand for their products, obviously they need to invest in more equipment. Oftentimes that equipment will be coming from Europe. It comes from Germany, from Switzerland, and that equipment takes months to arrive, to install, and for their production to ramp up. They also have to hire staff that they can trust. A lot of these mints are government organizations like the Royal Canadian Mint, the US Mint. Those are basically unionized effectively because they're government. So it's difficult to ramp up. They don't turn on a dime. And so the disruption in the supply chain really starts there. These mints have a hard time adjusting their production schedules and producing more. And then you threw COVID into the mix, and a lot of them were closed. They had cases of COVID in the factories. They had to send people home. They had to change their workstations. Beyond that, the metal then obviously flows through the wholesalers. The wholesalers will turn it around as quickly as they can. Some of them were taking orders for products that they didn't have delivery dates on, which is always a little bit risky, but it's a practice that can occur in the industry. But the other part of the supply chain that became really challenging, and to your point, Bart, because we were on an island, is the actual delivery. So is it going to come on a plane? Is it going to come on a boat? What do those schedules look like? In our case, everything comes in on commercial airliners, and the Cayman Islands went into lockdown mode, meaning we had no more tourists, no more commercial flights. So all of a sudden it's like FedEx can't deliver, Loomis can't deliver. How do we get it to the island? At one point, we actually had to hire our own private courier plane. We hired a plane to put a substantial amount of precious metals on to get it to the Cayman Islands during the COVID. So supply chain disruptions are a very, very real thing. It's starting to improve again. It's gone from like 4 to 8 weeks delivery, and in some cases, no delivery on certain products. And right now we're advertising to our client base anyways, it's 2 to 5 weeks delivery. So it has improved, but we saw just, pretty crazy wait times during the peak of the bull market. In terms of inflation, obviously, if you're the stimulus packages that are being proposed are, in my opinion, preposterous. As a Canadian, I am most closely linked to the Canadian government's budget proposals. And in our budget proposal this year, our finance minister stood in front of the country and said, we are proposing a $360 billion deficit budget. And her colleagues applauded this budget proposal. I don't know how a proposal like that makes any sense, but it has a lot to do with the amount of stimulus that they're injecting into the economy, the amount of services that they're proposing for underprivileged people. And I have no issues with helping people on a social level. But the budgets that are being proposed and the fiscal stimulus packages that are being proposed by our governments right now across the world, in the United States, Biden is proposing record stimulus packages. In Canada, like I said, proposing a deficit budget of $360 billion a year. It's completely irresponsible. It is going to create, or it already has created, a very inflationary environment. And when you have an inflationary environment, you can expect commodity prices to rise because the value of the base currencies, the base trading currencies, is being devalued. So automatically you're building inflation into these commodity prices. But beyond that, and I think most importantly for gold and silver, is that you're creating uncertainty in the marketplace. And when you have uncertainty in the marketplace, you guys know very well that gold and silver tend to do well. The prices tend to rise because investors are looking for a hedge. They're looking for an asset class that they can hold that has some certainty, some predictability. And I think that's going to become very, very important in this new environment, this new era that we've entered, this inflationary period that we're entering.
The effects of monetary policy and or inflationary uncertainty also travels really fast. What we've seen at Gold Republic is an enormous increase in the number of people that are low to mid tier investors, and the age of the average investor has gone down significantly in the last 12 months. I just wanted to ask you if you have experienced the same thing, or what your view is on that.
I would agree with the trend. We've seen similar trends in a lot of our clients being Americans. We're seeing a similar trend out of the United States. Historically, the average gold buyer has been like a 55-year-old mid to high net worth investor. And all of a sudden, we're seeing this, like you said, a more mainstream average earners, investors that were not loyal, I think most importantly, not loyal to precious metals before, are starting to find the benefit in owning precious metals. And that includes a younger segment, which is very encouraging for us, obviously, who are in the industry. But we are seeing a similar trend. And what's most interesting, probably from our perspective, is that because we're offshore and we specialize in the offshore advantage of owning precious metals, is that these first-time investors, not only are they worried about the economy, and not only are they finding precious metals, they're actually looking for offshore options as well, because they're not keen to keep their precious metals necessarily in the United States. Obviously, the political situation there over the last 12 months was, quite volatile, and they have a lot of issues socially that they need to work through. So that, that causes an uncertainty, and people are looking for alternative solutions.
You talk a lot about, and that is also what I think your proposition is as a business about, is reputableness and recognizableness of when buying bullion or investing in bullion. And so when browsing your website, you can only buy either nationally minted products, or, and correct me if I'm wrong, products that are really well established, reputable, from reputable dealers. Could you again explain, maybe because you've done this before, but could you maybe again explain why people who are interested in investing in precious metals should look for these elements when investing?
Sure. And like I said earlier, one of the reasons that we have a narrow product line is because we want to make investors' lives as simple as possible. If you go to certain websites, and I'm not saying this is the wrong way to market a business, but if you go to a website where there are 200 products available, it makes the investor's life a little bit more challenging in deciding what is the best product to own. So we try to narrow the options for them to make their choices a little bit simpler. That was our approach. But what it boils down to, I think, Bart, is really the resale value of the product, which has several factors, obviously reputation being one of them, global reputation, I should say, because it's really a global business. This is not only what will be bought and sold in Canada or the US, it's also what can be bought and sold in Europe and in Asia. So you want to look for products that have a global reputation, a global brand recognition, and also you want to make sure that that product has a competitive buyback price or resale price. It's a little bit like when you're shopping for an automobile. You want to make sure that there's a decent resale value on that automobile. And so those are, two of the things that we will help us guide our clients in terms of the products that we recommend to them. I'm certainly not opposed to private mint products where people can save a little bit of premium upfront when they're purchasing the products, but they need to be aware that there's a second part to that equation when it comes time to liquidate the products, that the savings that they had up front might not be there, or there'll be a discount when they sell. So you want to look at that total spread the cost above the spot price to purchase the product, the discount or the price above spot or below spot that you're going to receive when you sell it. That total spread for any product is really the most important aspect when selecting a gold or silver product to begin with. And then obviously you have to think about your exit strategy when it comes time to sell these products in 5, 10, 20 years or never. But if you are going to be selling or liquidating, in what denominations, what quantities do you want to liquidate? Because that can obviously affect the product that you select when you buy. So if you're looking to sell, for example, in $5,000 or $10,000 increments, when you're liquidating, obviously you're going to want products that have those values at today's prices anyways, so that it's appropriate and efficient to sell when liquidating.
That's actually would be a bridge maybe to one of my questions, which maybe would take the discussions like back to a bit the macro scale. When you look at the different types of investments, so obviously you could invest in ETFs and miners and precious metals, physical precious metals. And there is a key difference in all those type of investments. But what actually interests me the most is to kind of go back into the backstage of how important that actually the dissociation even is fundamentally from an investment perspective, especially if we look at the current monetary setting. We have, for example, here in the Netherlands, we have Willem Middelkoop, who with his book, The Big Reset, tends to actually argue that we might come to a moment in which we'll have such a humongous amount of debt that we have to go into debt revaluation or basically re-level to somewhat or cancel even debt and reinstall a new type of system. And in that transition, the precious metals are actually the big winners. My first question would be, how would you, in very simple terms, dissociate those three types of investments, and why would be precious metals, physical precious metals, be an edge in all forms? Leading, if we... in one way or another, it doesn't matter if we have to believe it or not, would go into a scenario where there would be a big reset in general.
Yeah, I think I'll start with the latter and I'll work my way backwards. I think that physical precious metals comes out as the winner because it has the least amount of counterparty risk and uncertainty in a scenario like that. Because what you're describing, and I don't know how I feel about that situation, if it's the right way to go or not. I'm not going to try to comment on that because I'm not an economist, but physical precious metals, when you own it directly and you hold it directly, or you put it in a storage facility where you're the title holder, the owner of that personal property, is you remove all third-party, risk, all counterparty risk. And in a scenario like that, where the outcomes are undetermined at this point in time and certainly negotiable and fluid in nature, because it's going to be something negotiated by politicians, and who knows where the chips are going to fall in a scenario like that. But what you do know is if you own physical precious metals, it is your personal property. No one else has title to it. And therefore, there's really no risk or uncertainty in the outcome, or a lot of that risk or uncertainty is removed. Whereas when you're talking about miners, or you're talking about ETFs, in the case of miners, these are companies that are managed by other people. They have obviously balance sheets, and they have risks that you're unaware of. They have management decisions that you're unaware of, or you have no control over. How that all shakes out is really the magic to picking the right miners. Obviously, the where they're pulling the metal out of the earth is important, but with the mining stocks, what I tell people anyways is, yes, there's a lot of potential upside if you pick the right companies to invest in. If you do not pick the right companies to invest in, there's a ton of potential downside. And so you want to leave those decisions generally up to professionals or fund managers. Mining stock funds, I think, is the best way to go for the average investor who doesn't have a tremendous amount of time or knowledge to apply to picking the right miner. For the ETFs, generally a pretty good deal as long as you understand the fine print and you know what it is that you're investing in. If your goal ultimately is to take physical possession of the underlying asset, ETFs may not be the right the right choice, because generally that's a very expensive option to convert it into physical, or you might not have the option to do that below a certain quantity, for example, 1,000-ounce silver bars or 400-ounce gold bars. So you need to understand the fine print. I think ETFs are a great short-term means of owning precious metals. I use funds myself to own precious metals if I have a short time horizon. So if I'm investing for 3 months or 6 months, I have some additional capital, I want to invest in precious metals, I don't want to pay the premiums and storage of physical, then I'll go into the ETFs. But for a scenario that you're describing, I would certainly think that physical metals, for the reasons that I talked about, are the way to go.
Mm-hmm. And now if we apply this now more towards, now a bit back because we started with this, but with the silver squeeze in general, a lot of in the silver, WallStreetSilver, or just in the precious metal industry in general, commentators are describing that there is something, and that of course is always based on the data available, a mismatch between what we see is traded on paper and what is physically available. What is your own analysis about that?
I can tell you, having worked in the industry for 15 years, that there is a lot of precious metals traded on paper. And we're not only talking about futures contracts or more institutional contracts for precious metals. I'm talking about even on a retail level, when you're looking at unallocated accounts, when you're looking at pool accounts, which this was big news recently with Kitco and the Perth Mint being called out by investors about having physical precious metals backing those products. I can tell you with absolute certainty that there are issues that do exist when it comes to those paper products. And that is another reason why our company chooses exclusively to sell physical products that are 100% allocated, 100% segregated in storage, because we want to remove all of those question marks, all of those risks. So I'm not, again, this is all, it comes back to what we spoke about earlier about being privy to information. I cannot give you a global synopsis and say, hey, guys, for every 1 ounce of physical silver, there's 500 ounces of paper contracts. I don't have that number. I know that I've heard numbers from anywhere from 300 to 1 to 500 to 1. I can't tell you with certainty, but what I can tell you with certainty, having lived it, having worked at several companies within this industry, is that unallocated products, pool products, do create a scenario where there's possibility for the companies to kind of manipulate their positions in their favor, which is not favorable for the investor.
Mm-hmm. So there's manipulation, and now, of course, like to which degree and to which propensity is unclear because of lack of data. And I also assume a lot of resellers themselves, or retail, all kinds of basically producers, but also retailers in general, don't disclose all the time how much they sell, how much they have. So there's a bit of a black hole there. But do you believe that it is actually possible to create what the silver squeeze is intended to actually do from a technical perspective, having the experience in the industry?
Is it possible? Yes, I think it is possible, but it's going to take, I've touched on this earlier, I think the key is volume of investors and sustained demand and holding of the metals to create that base. So if we look at spikes in activity, it'll create a spike in the price, but it won't be a sustained price valuation. We need a large group of investors. The estimate that you most often hear is about 3% of investors own physical precious metals. We need to get that number significantly higher. That number has to climb to 5-10% maybe, to build that base of investors that are holding precious metals. And we're not talking about one-time purchases. And this is where I'm afraid they might fall short. One-time purchases that are only designed to make short-term gains. Because when we talk about GameStop and we talk about silver squeeze, I feel like a lot of people are just trying to make money. We're young, we're on social media, we're aggressive investors. We're saying, hey, can I make a few $1,000s without doing any real work here, with just jumping in and jumping out? And the answer is, yeah, in this environment you can. But will that ultimately get us to where we want to go and squeezing these large institutional players out of the market and their short positions? I don't think so. I think you need a sustained marketing campaign, and I think we need our industry as a whole to come together and really tell the same story. So I think that we've got some challenges but the initiative is good, and it's going to need support, from all of us in the industry if we're going to get there.
Also, and I think that the contributing factor is that we live in such a volatile world now, where monetary policy, fiscal policy, just like you said in the example of your home country. Well, we see the same thing here in Europe broader, but also in the Netherlands itself, where you can just know that your purchasing power is diminishing, not on a yearly basis, but almost on a monthly basis. You can see just prices going up of products, and that is scaring people, a lot of young people as well. Talking about silver, but also gold. We are at, I think, $25.50 an ounce now for silver, $18.40 for gold. These, of course, are spot prices. The real metal always carries a premium. This growth of the prices started way before COVID. What are some of the signs that you might have picked up where that attribute to the growth of these prices?
Well, again, my philosophy with the gold and silver prices reaching new highs. We saw obviously gold reach its all-time high in August of 2020. Silver has a ways to go if we're going to get back to the $50 an ounce silver that we saw back in the 2008, 2011 rally. My philosophy is very simple, and it always comes back more or less to the same thing: is you need a segment of the market that otherwise is not loyal to these precious metals. And to your point, Bart, when you go on those Reddit forums and you see that enthusiasm from investors, I think a lot of that enthusiasm has existed for a long time amongst the real stackers, the loyal gold and silver investors. And I asked myself if it's the same guys who have now found a forum to finally communicate that, because precious metal guys, they're always isolated. They're like in a little world that most of their friends don't understand, and they need someone to talk to about it. And that's why they come to groups like us, and they are so happy to talk about their passion for precious metals, and they're so loyal, and they say, we'll never sell this stuff. So just to comment on that, I wonder how many of these guys are just finally able to show their enthusiasm. I hope it's those new investors. I hope these are people who are first-time buyers. But my point being, with reaching new highs for gold and silver and driving that price, the only way that works, well, there's two main factors. Obviously, central banks being huge consumers of gold, not so much silver, unfortunately, but huge consumers of gold in uncertain times. So the good news is central banks are still buying at a good clip. And I expect that to continue, because they, as much as we criticize government, they do employ some very smart people, on the economic side of things. And in some cases, not Canada's case, because we own no gold as a country, but in some cases they do stack up, and they're buying in very, very large amounts. Russia and China are adding to their positions on a regular basis. So that will definitely help drive up the price of gold, because they do buy in large quantities. But the number one factor is you need to get mainstream investors involved. They have to come to the party. If they're not at the party, there's no way we're achieving new highs in gold and silver. That's really the main driver in the market for gold, especially because it's not the industrial demand and the jewelry demand for gold is on a slow decline. Even in India, you're seeing a decline in gold being consumed for jewelry. They've replaced it with silver, which is interesting because it's cheaper. It's going to take decades before they completely phase out gold out of their culture. I'm not saying that'll even ever happen, but there is a slow decline there. So the only way gold's going to hit those highs is if it's through investment demand for physical metal. Silver will tend to follow. Silver tends to follow gold on a long-term chart. And again, these initiatives that we're seeing, it's a whole new way of investing. You look at Dogecoin, I got the bug, with the Dogecoin recently, and it's all based on social media. It's a whole new way of looking at the world and investing. And I was trying to explain to my wife over dinner yesterday that we can't use the same thought process anymore. Elon Musk goes on Saturday Night Live and Dogecoin goes down 30%. This is crazy stuff, but this is the world we live in. Like you said earlier, information travels fast, influence travels fast, and we're all subject to that influence. So I think influencers need to get on board with gold and silver, to drive it to the new record highs that we all hope will happen.
That's an amazing point, especially about, well, influence travels the world very quickly, but also the part about Wall Street Silver, that it has become a point where the stackers like, well, I am, come together and just share their enthusiasm about silver as well. So that's a very good point. So you've been in here for 15 years. Is this, would you say, the most interesting or uncertain time in the past 15 years? Or would you say perhaps, like we both experienced, the 2008 crisis was more interesting or more, of course, different, but could you say something about that?
That's a good question. They're completely different in the sense that 2008 through 2011 was, I guess you could say, a more traditional recession or crisis. The indicators, the factors, the housing market bubble, the lack of regulation for financial institutions and the derivatives that they were being traded and offered, I guess you could say it was a little bit more predictable. And so it didn't have the same type of media firepower that got us excited about this latest COVID-induced run. So in that sense, I would say less exciting 2008 to 2011. But what was exciting about 2008, 2011 is I remember working at Kitco at the time, and I was pretty young. I mean, I was in my late 20s. And I remember going on our website, and we only offered 2 products. After like 6 months of the bull run, we offered 400-ounce gold bars and 1,000-ounce silver bars because this is the only 2 products that Kitco could actually get their hands on and sell at that point in time. Everything else was sold out, broken. There's nothing. This bull run has been interesting for different reasons. COVID obviously being the fuel on the fire, the underlying elements, the fundamental issues that were already there. You know, we were already starting to see inflation. We were already starting to see the stock market maybe being overvalued. There was a lot of uncertainty, if you remember, before COVID even hit. People were buying gold. As of the summer of 2019, we already started to see the price move out of the $1,300 range into the $1,500 range. And then COVID, happened and the whole thing just exploded in like a 1-year market like we may have never seen before. And obviously we saw the record high in gold. So that reflects the demand that we saw. So pretty interesting. I would say looking forward, we have young staff that have joined us recently. And I'm like, guys, like this is such an interesting time to be involved in precious metals because it's relevant again. You know, there was a time period between 2013 and 2019 where it was pretty quiet for, the industry in general. There wasn't a whole lot of reason to be talking about gold and silver. Silver was stuck in like this range of $13 to $15 an ounce or something like that. And gold was in this $1,200 to $1,300 range. And we were all scrambling to come up with good marketing pieces to keep our investors interested. And a lot of people started to leave to go to the crypto space because they saw better returns. So it wasn't a great time for precious metals, but right now we're very relevant again. Precious metals is again front page news. It was last year. And I think that anyone who understands or has a basic understanding of investing in the global economy should be paying attention to precious metals right now because you're going to want to have some in your portfolio for the next stretch that we're going to go through.
All right. What's your favorite precious metal? Bart or silver? What's yours?
I'm going to say my favorite precious metal is palladium because, because it's often forgotten. You've got, not only do you have gold and silver, you have platinum, palladium, and rhodium. And if you look at those 3 metals, especially palladium and rhodium, over the last few years, the returns have been amazing. So palladium's returned 500% over the last 20 years, but in the last 24 months, it's just been like 250% or something, like fantastic returns. It's an industrial metal. People don't know a lot about it. It's a very small market. A lot of it, obviously, in catalytic converters and cars. And then people are always like, well, electric cars are taking over the world. That's not true. That's totally not true. The rate of growth in the traditional combustion engine vehicles in the world and electric, the traditional engines are actually outpacing electric right now. And that's because China and India, people are buying cars for the first time. They're buying more mopeds. These automobiles and these mopeds have catalytic converters or a small amount of platinum and palladium to reduce the toxic production coming out of those engines. So don't forget about the platinum group metals. Don't forget about palladium. Have a little bit in your portfolio. That's my answer.
There goes a passion.
Yeah, the passion. Yeah. I'm from Montreal. We're European too. We get passionate about stuff. So.
No, actually, it's very. I love it. I love it. Just that now we did the trigger was palladium. All the after an hour we got it. Fantastic. So we should more look at palladium. All right.
Yeah, we don't offer palladium. We do offer a platinum. I think palladium has seen tremendous growth, but what I find even more interesting about palladium is how the Oracle of Amsterdam, Willem Middelkoop, he actually made a comparison between palladium and silver, seeing how what started the explosive growth in palladium. It was the physical demand of the metal. So we've seen we had a paper market. Physical demand outpaced the paper market, and the shorts were broken, and it resulted in it resulted in finding new price discovery, essentially. So where price discovery first was a paper exercise, now suddenly there was this physical metal that is used in so many different ways, well, especially of course in catalytic converters, and we had to re-find a new price for this precious metal. So that is really interesting about the palladium story, I think. So it's really it's a great story, and perhaps silver will retell that story.
Hopefully, yeah. I think the upside for silver. Look, I always look at things potential upside versus potential downside. Because people are like, "Is it a good time to buy gold and silver?" I'm like, "Well, what's the potential upside for gold and silver? It's tremendous." You look at the way that the governments are behaving, the way that the global economy is changing all the time. There's so much uncertainty. There's so much volatility. Upside for gold and silver is great. What's the potential downside? 10%, 15% versus potential upside of 200%, in our lifetime. It's a no-brainer, right? So, that simplifies the equation a little bit.
That's a good bridge on, because you just mentioned crypto, and you see this maybe a relationship between cryptocurrencies and the precious metals industry. Some say it's a straight-on one-on-one fight. Some say it's co-opetition. Some others say, well, they can both actually coexist. They have different purposes and different utilities within the current monetary system and in terms of portfolio diversification. What do you think about that?
That's a good question. It's a very relevant question. It's funny. When I think about this, I always kind of go back before crypto was part of the discussion. And back then, it was equities versus gold. It was, well, why would I own gold when I could own Apple stock? That was the argument. And it was the same thing. It's like either you're all equity or you're long precious metals. There wasn't a lot of gray area. And that was the argument we used to have. And my position at the time was the same. It's like, look, you should own both. You should be well diversified. You should be hedging that Apple stock with your gold stock or your gold bars and coins or your silver bars and coins. And I think my position personally is the same today with Bitcoin and crypto in general. I own both. For full disclosure, I own both. I'm very happy I own both. I sleep better at night owning both because I'm like, I've got an option on the future in my crypto and I've got an option on the past with my gold. I've got the proven road track record of gold in my portfolio that's been with us for 6,000 years. I know exactly how it behaves. I know exactly what it does. And I know when it does it during a financial crisis, it's going to perform very well. Crypto, on the other hand, I don't know how it behaves quite yet. I don't follow the market maybe closely enough, but I don't fully understand its volatility. I don't fully understand its use in some cases. Some coins are yes. Bitcoin, I know I could send you a transfer right now, but my Dogecoin, it doesn't have that many uses. I don't really understand its purpose, but I love the idea of the volatility and the potential upside. So I think, again, for the sake of diversity, people should own both. That's my position personally, but I see the fight. It's the old black and white. It's we're better than you, and it's a tough argument for gold right now because you look at crypto and nobody can make 12,000% owning gold like you could on Dogecoin since January. But the flip side to that argument is obviously nothing that made 12,000% is sustainable over the long term, and there's either going to be a correction or some sort of deviation at some point, or a lack of return at some point. It doesn't make sense, obviously. So I'm in the middle though. I'd be curious to see what you guys think as well.
Well, I come from the crypto industry actually. I'm kind of a newbie in terms of precious metals. I've joined the company more than 6 months ago, and before that, I got to be honest, I didn't know much about it. So my core, let's say, interest before that was in crypto, and this was since 2016. And the way I see it is actually pretty simple. Precious metals is real, crypto is not. It's not something, if internet shuts down, if networks shut down, and now it's really far-fetched where I'm going here, but precious metals is the realest thing and most innate to human, let's say, psychology, behavior, because it's shiny, because it looks good, because it does something to you that a pixels can't when you look at them, a part of returns and a kick of dopamine. But the other part of it is that I do believe that there is obviously, I think crypto is highly leveraged. So that's, of course, from the risky side of things, it's very liquid, as it's getting increasingly liquid and leveraged, which also is something that from a risk perspective could also go down very, very quick, as we've seen already in 2017, in no time, right? If you don't have like stop losses or other mechanism in place. Whereas gold and silver do fulfill their respective functions, not only from a monetary perspective, but industrially speaking, they have a constant fluctuating demand. So my dream would be to see the convergence of both, and that's, I think, where the beauty lies. Is I see them all coming together, and that's I think where we live in a time of convergence, and this is part of it.
Well, I agree. I think those tokenization projects are very interesting, and we've participated in a few thus far. It's been a really interesting learning curve, but I agree that's probably the happy landing area. That's got to be the target, and I think that's definitely. That's something that will happen. It's already happening, obviously, but I think even improved versions of what we've seen so far in the market in terms of tokenization of precious metals will continue. And I think it's an important step forward for the industry.
What are the use cases? Because we've seen, for example, like some also companies do tokenize gold and so on. Where do you think this will evolve also, like, or basically entail for precious metals players in the precious metal industry? You've partaken in some experiments?
That's the question that needs to be answered. And because we've been approached by a number of token issuers, and in theory, again, similar to what you've described, basically tokenizing these physical assets, and it's a great concept and it's an exciting concept, but monetizing that for the precious metals industry, how do these dealers that have these client networks, how do they get involved? How do they make money out of this? How do they use it effectively to trade amongst themselves? Those are the questions that still need to be answered. Our industry doesn't have those answers yet, or in some cases, there isn't necessarily a need from the industry itself for this technology, because we've had ways to trade precious metals and settle transactions for a long time. And if you're looking for something that's cost effective and liquid, you can look at unallocated accounts. But with the downside being you don't have the benefits of the blockchain and making sure that those assets actually exist. So that is a good question. And really the monetization of those tokens and how they fit into our space in general and how the industry adopts them, I think is something that it will happen naturally. It's already happening. They're already being adopted. They're already being resold by retailers, and wholesalers are getting involved. But not all of those questions have been answered yet. So it's going to be interesting to see where the dust settles in terms of the adoption of tokens by the industry, not necessarily by the retail investor. And I think, for the retail investor, it's also highlighting some of the use case scenarios. Once you have it in a token form, what is the advantage over, the physical form? How are you going to use that? How is government going to view that as well? How is government going to treat these tokens? So still some unanswered questions. I think it's early days. It's kind of version 1, version 2 of the whole thing. But I have no doubt by the time the three of us retire that there'll be a whole other generation of products and services built around that. But guys, yeah, it's been a pleasure. I hope to get over to the Netherlands to see you. You're invited to the Cayman Islands. I know you'd love it. Once travel opens up again, we should definitely think about filming one of these down there. Maybe we can do it inside the vault. maybe that's the next stop.
That's
and you could come inside our vault.
Yeah, I will. I mean, I definitely look forward to getting back to Europe, and I will make a point to come out to see you guys when that happens.
I'm game.
Definitely.
All right, Mark. Well, all right. Let me just do the outro. Well, Mark, thank you very much for being our guest at this Gold Republic podcast. Of course, to all the viewers, if you've enjoyed this podcast, please feel free to give it a like. If you haven't subscribed yet, please subscribe to the YouTube channel. If you have any questions below in the comments section, we always try to answer. And Alexei?
Well, always hit the subscribe button on iTunes and Spotify if you're listening to us. Forward it to any colleague or person you might think it's interesting. And see you and hear you next episode of the Gold Republic podcast.